You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets. Welcome back to another episode, another special episode of The Builder's Mindset. I'm recording from my hotel room in Las Vegas, Nevada, as I've spent the last 2 days at the International Builder Show, having meetings, talking to trades and suppliers and builders alike, and just kind of getting a sense of a feel for where everybody's at this builder show. And then we're going to give you a little preview into the earnings report summary, which should be coming out in the next couple weeks. So, I would say that generally speaking, the mood at the Builders Show is cautiously optimistic. I don't think anybody's ready to say it's awesome, it's wonderful. I don't think anybody feels like it's horrible. I have heard the term survive 2025 a few times, but heard it said in kind of a way that's kind of tongue-in-cheek, just sort of like, hey, let's get through this sort of flat year. And which I've said before, that's what I believe it is going to be. I think we're talking about a flat year. And, it's a reasonable amount of optimism, but there's some cautiousness tempering that. I had a consultation today with a Wall Street investment firm, and very attuned to trying to figure out what's going on in the macro forces, what the large builders are doing, what's happening with their margin compression, and what's happening with inventory levels in Florida and Texas. So, yeah, so I think, like I said, there's a fair amount of optimism, but there's definitely some caution around that optimism. And I think we'll just have to wait and see, because I also, looking at some of the data, I don't really feel like anybody's ready to call the spring selling season in terms of what it's going to look like. We're a couple weeks into it post Super Bowl, and I would say I'm seeing kind of more of the same. There's some areas that look sort of flat. Maybe some communities are up a little, some are down a little bit. I think the struggle is going to be still, though, for builders right now. And the interesting thing, and I was talking with this investment firm about this, I said, the inventory count, or sorry, not the inventory count, the new community count it definitely needs to be looked at on a local level. I think when you see, the earnings reports and you read through that, all the builders have worked very hard to maintain or move their community count up slightly. Definitely not enough to hit that sort of 10% growth target that they've all been trying to get, and they all wanted to get for the last few years in a row. But, there's some places where the sales pace is just as solid, but the total number of sales are down because there's not as many communities open. And so it'll be interesting to see what the builder, I still think it's too early to tell. It'll be interesting to see what the builders do after the Builder Show. Super Bowl's done, Builder Show is done. Everybody gets home after spending, 2, 3, 4, or 5 days in Vegas. I'll be here one more day. I'm a firm believer. 3 days is too many days in Vegas. 2 is kind of, for me nowadays, bordering on too much. But so anyway, so one more day, and then we'll be heading back. And I'm looking forward to tomorrow. I have some more meetings where I'll interact with a lot more builders and kind of get more of a sentiment on how people feel about things. But I still am generally hearing, and here's what's interesting, rather than calling 2025 survive 2025, we'll just call it the bridge. Because I will say, when I talk to most people at the Builder Show and away from the Builder Show, everybody seems pretty optimistic. I wouldn't even say cautiously optimistic about 2026. And so it'll be interesting to see. So I think it's, you really got to look at it on the local level, but I would just say generally overall cautiously optimistic is the tone and the tenor. People are having a good time. Vegas is a great town if you like to eat too much and drink too much. I don't like to drink too much. I don't like to drink at all, but I do have a tendency when I come here to eat too much. So I'll have to get back on track once I get back home. Um, One of the other things that I think is interesting is that, and maybe I just wasn't paying attention last year or previous years, but there are over in the section, and if you've never been to IBS, I recommend you go at least once. It's a lot like, you ever notice that when you're driving a town and you see a car dealership, all of a sudden there's like 6 or 7, like communities and cities tend to like do land planning, so all the car dealerships are together. And it almost seems like some areas IBS does that, like, and particularly they do that with software and technology. They're all kind of lumped together, and they're in the West Hall. And maybe I just haven't noticed in previous years, but wow, it seems like there are a lot of software companies, the tried and trues, but there's also a fair number of ones that I haven't heard of. There's also a lot of consulting firms with different techniques. I saw one kind of advertising EOS as their mantra, or sort of their methodology for helping you build your business. There's a couple that were focusing kind of more like, I would say they are kind of in that like managing your funds, CFO type, fractional CFO type companies. And they're in the same area as the software companies. And it seems like there's a lot of software companies. Now, there's a couple interesting things that I find about that. Is that, and I'm going to do some more research on some of these companies, these consultants, is because I wonder how many of them have people that actually have home building experience. There was one company there that was, I would say, they were more of an executive coaching firm, and I looked at some of the bios online. Very little, if any, I couldn't find really any home building experience in their team makeup. And so, that kind of concerns me. So if you're a builder and you're listening to this, we've talked about this before. Builders believe that they are all unique. And I believe that 80% of what a builder does is the same as another builder. It's all about operations and how you execute that. But 20% is unique. And if you're not respectful and manage into that 20% that's unique, one builder to the next or one market to the next, and you don't understand those nuances, I've worked for 5 builders in 3 different markets, and I can tell you that the nuance is important, but we tend to overstate it a lot in the industry. And so I would say, though, if you're looking at your company and even thinking about hiring someone to help you with your business, I would ask yourself, is what we need help on have anything to do with how we actually operate as a builder? If you're talking about cash flow management, managing capital, access to capital, deploying capital, and getting capital in the most effective, cost-effective manner, not going to make such a big deal about their home building experience. But if you're saying something to the effect of like, hey, we need to improve our product or how we bring our product to market, we need to improve our scheduling or our quality or our costs, you need somebody or a company that has long time tried and true, preferably multi-market experience, preferably multiple builder experience, to help you get to the next level and avoid some of those blind spots. So, but interesting. So lots of software companies. Seems like there's more consultants. And then on the software company, this is something I still thought there's only a couple that are even marginally talking about AI. And I'm going to go on record right now as saying that in 5 years, 9 out of 10 software companies at the Builder Show will be talking about integrated AI and what it's doing for their software to help you run your business more efficiently. Let's see. But I was surprised that there's not many really talking about it. So interesting. And then also in the software area, lots of companies doing different versions of CAD, drafting, takeoffs, And there's another one that I think is interesting is and some plan companies that you can buy plans from. So there's lots of opportunities. And hey, I would say if you went to the Builder Show and you're thinking about purchasing a new software or one of these consulting services or one of these services that provides some sort of software for CAD estimating, etc., feel free to reach out to me, and I'd be happy to, no charge, hop on a call with you and talk through what are your goals and objectives, who are you looking at, who are you thinking, and help you make the best decision to get your business, really performing at a higher level. So that's kind of the nutshell of it. And then I'm gonna go over just really high level here real quick. We'll keep this episode short this week because I'm coming down a little bit of a cold, I think, and I want to get a good night's sleep tonight. My last night here in Vegas. So I was just going to give sort of a real high level. So interesting is that if I had to boil down this previous quarter's earnings report, for most of the builders, it's the year-end report. It's Q4 and year-end. For D.R. Horton, it's Q1. For those ones that are off by a couple of months, we're still in their Q4 year end. But that's another thing we have to take a look at when you look at the data, in terms of how some of the sales pace goes and how the backlog goes. Because if you're a Horton and you just finished your Q1 at the end of 2024, because your fiscal year ends September 30th, you really need to temper the conversation about how their first quarter went. Because typically with most of the builders, we watch their first quarter to see how they move into that spring selling season, January into February, Super Bowl Sunday and whatnot. But when we're talking about Horton's Q1, it's not the same because it's October, November, December. So their Q1 is when things are winding down, and most other builders' Q1 is when things are winding up. So you really need to look at Horton's Q2 compared to most other builders' Q1 when you want to look at things like, margin comparison, sales pace, delta change. And so just be cautious about that. But when we look at that, those reports, there were really sort of four topics that just kept coming up again and again and again. Not all the time, but I would say more than half of the publics, and that is a lot of talk about product diversity, and feeling good about that product diversity, being able to hit different buyer demographics with their product diversity. Fair amount of talk about acquisitions. Century had a couple acquisitions. Meritage had, I think, one acquisition. I don't know if they had two. I know they had one. Taylor Morrison had an acquisition, and I think Lennar had a couple of acquisitions. If I remember correctly, I think Horton even had, but just acquisitions and completing acquisitions, and then potential for acquisitions into 25 also, which honestly could play into this survive 25, right? This might be the year where if you're a private builder, you might say, I got nobody to turn this company over to. We're not going to grow this year. Tired of fighting for capital. 26 will be a good year. So let me get out now and sell to a big regional private or a public. And, let me get a cash infusion to help fight and get more capital to fund the business, so maybe that's something they think about. So fair amount of talk about acquisitions. Sticky incentives. I put the sticky there, but incentives, I think they were mentioned in every earnings call, like everyone. I can't think of one where it wasn't. So sticky incentives, they're here to stay. When I was talking to that investment banker today, I talked about, my opinion, the number and the dollar value that builders have been using for incentives, mainly to buy down mortgages, but they're getting a bit more strategic now in what they do with it. That number is baked into their margin. Their margins, yes, have kind of been compressed a reasonable amount in the last couple of quarters of 2024. And I believe that's going to continue. That number's in there. It's not going away. If, big if interest rates come down and they can save some incentive money by continuing to buy the rates down to what they have been buying them down to, let's say you're a 599 builder or a 499 builder, you keep buying at 499, but interest rates drop a quarter or a half a point, your cost of buying that loan down just got a little cheaper. I think builders are going to take that money now and put it in their back pocket and save that. So that's the only way I think that incentive number comes down, but a lot of talk about incentives. And then last but not least, I would say also probably half of the builders talking about this was the land light strategy, managing capital and the inventory of lots in a land light basis to keep as much off books as possible, but keep it in control. And then, right? We all know about Millrose, the spinoff, Lennar, really taking us into new charted territories as it relates to this land light strategy with the REIT spinoff, Millrose. I highly recommend, if you're not up on Millrose and what's going on there, listen to Lennar's at least their last two earnings reports. Get the transcripts. They're pretty good. I think about putting them online. Get them, listen to them. You'll kind of get really up to speed. It'll take you 2 hours. They're each about an hour. You'll really get up to speed to what they're doing with Millrose, what the plan, what the strategy is, and it'll be a great way for you to understand what they're trying to do to the industry. So yeah, so those are the big things, I think, and there'll be a little bit more detail in the report this time around, and then shortly after we'll do a year review. The report that's coming out in a week and a half will focus on Q4, specifically Q4, and then we'll go back and do a whole year in review just for grins and giggles, because it's nice to look at the year, but I'm really more a big advocate of like looking at the quarter, because the quarter dynamics and what happened in this quarter relative to last quarter is a more targeted picture of what's going on in the market, in my opinion, than looking at year over year. Year over year is great to look at from a closings count, and we're creating a little cheat sheet ahead of time. Another Builder 100 will come out, but I'm impatient. I can't wait. So we're right now trying to glean through. We're gleaning through all of the earnings reports, and we're making our own little 2024 closings, 2023 closings, 2024 closings, because most builders moved up. Most builders managed to close more homes in 24 than 25. And then I think with that land problem that we've been talking about for quite some time, they're in a community, they're struggling to keep community count up and increase it. I think everything that they squeezed out in 2024 to grow from 23 to 24 is also going to be headwinds for the closing counts in 2025. Let's look at the silver lining there, right? There are some markets like Texas and Florida where there's all the talk about, this glut of inventory. Is it higher today than it was a year ago? Yes. Did they potentially get a little out over their skis with their building, with not planning for, the buyers easing up as it related to having such a spirited election cycle? Yes. Is it higher than pre-pandemic levels in certain specific submarkets? Yes, not the state, I don't believe, overall. Is it to the level that we should really be panicking? No. Why do I say that? 2 reasons. Inherent demand, and we've talked about that. You can go back and listen to the podcast. I'll put it in the show notes, which podcast, where we talked about inherent demand. Inherent demand is still there. There's a lot of naysayers who are going to talk about Gen Z is going to live in apartments for their whole life or whatever the heck that is, but I'm not buying it. Home ownership's the American dream. It will continue to be the American dream. So inherent demand. And then here's the silver lining. The builders, I think, are going to struggle in the first quarter. They've got the first half of the year where they don't have the community count that they hope to have. And I think they'll modify starts ever so slightly in some of those higher inventory markets they'll get them corrected. That's what I believe. I believe by the end of 2026, they will get them corrected. And we'll just have to watch and see what Lennar does, because, Lennar, may correct by adjusting starts, but they typically don't do that. They usually correct by figuring out a way to get the sales pace to catch up to the starts pace. So goes Lennar, so goes their competitors typically in the markets that they operate in, because they wave such a large stick. They can have big impacts on what other builders do. And so that's, I think I do believe in the inherent demand that's still in the system, and I believe that the builders are going to get curbed a little bit based on the fact that they don't get to open really a lot of new communities until the third and fourth quarter of this year. And so I think 2025 will be a flat year. It'll allow them to reset, get inventory back in check. The chess game will be to do that without really cannibalizing their base home price. They're going to want to try to maintain that as best that they can. So, and then there's a third reason that I wouldn't panic about what's going on in Florida and in Texas, and that is I still truly do not see mortgage rates coming down anytime soon. And so that, if I'm correct there, there's a big if. If I'm correct there, that is going to continue to put pressure on the number of homes that are up for sale on the resale side of things. And we've talked about this before. The resale market, if there's less inventory available resale, that helps the new home construction because there's not the availability in the resale. So if you're going to buy a home, you're almost pushed to a new home. And you've got companies like Lennar and Meritage and LGI that basically they're a spec home builder. You can walk in and buy a house and close in 60 days or less. And so they're trying to compete with the resale market from that time to close, contract to close. And I think they do it well. And so I think that helps the new home construction market. So that's where I feel about things. And then we'll wrap up this episode with saying that 3 other things that just seem to be trends in the earnings reports, the earnings calls. Margin compression. Margins are down. And we're going to continue, number one. And then there's a forecast for continued pressure on margins. Do they stay the same? Do they go down further? That's a good question. We'll see. But margins are lower, and they expect to have continued pressure on margins. So that's 2. I know it sounds like 1 because they're both margin, but to me there's 2 things. Margins are actually down, and they expect headwinds in those margin areas. And what's interesting is that when you look at historical margins, and I was talking with somebody about this yesterday, the current margins for builders that they were getting, and say the calendar fourth quarter, excuse me, are not horrible. We had such great margins in 2022, 2023. But I think we kind of got used to these really crazy rising tide lifts all boats, right? Now we're going to start to see who are the real operators. And some folks are going to take a different approach. Some are going to sacrifice margin to maintain pace. And as long as they say that's their plan and strategy, my hat's off to them. Do what you got to do. Some of them are going to figure out ways to improve their product, their process, and their people to improve their margin, lower their SG&A. And others are just going to continue to watch their margins decline. And so we'll see how it plays out this year. So those are the 2. Margins are lower, and we're going to continue to see margin pressure. And third, in a lot of instances, not all, but we're seeing backlog shrinking. Number of homes under contract but not closed, the number of units and the dollar value of units is lower, right? Fourth quarter, it typically is. That's the slowest time of year. But in a lot of instances, builders, we're looking at that backlog at the end of that fourth quarter in 2024 compared to the end of the fourth quarter of 2023. And so that's interesting. A lot of things could play into that. It could be community count. And I think some of the builders have decided to stop selling overly discounting in certain communities. Lennar on their Q3 earnings call talked about their margins started to take a hit because they were maintaining their pace, both sales and starts. So they were having to incentivize a little extra to increase that sales pace. I want to say in Q3, Lennar's absorption rate was 5.2 sales per community per month. And I believe in Q4, it was 4.2. They are going to pick that up by managing their pricing and incentives. They were very vocal about that on their call. And but those are kind of the three of the things that stuck out for me on the earnings. Full report will be out within 2 weeks, hopefully a little less. Both the summary of each of the builders. We'll do their good, their not so good, and their notables, and all their data sets. And we're adding a data set too. We're going to add this quarter. We've been doing a number of closings per employee. I'm actually going to add revenue dollars per employee as well. Because I was talking to somebody recently, and they were saying that they were talking to a builder who was making some staffing assessments and evaluations based on that. So we're adding that. So there you go. There you have it. I said it'd be shorter, but it is still going to be closer to a half hour. I apologize. Hopefully you can still get it in your commute. And I'm going to go and get a good night's sleep to be ready for the last day of IBS, and hopefully wake up tomorrow with this cold gone and out of my head. I hope you guys have an amazing day. If you came to the show, hope you enjoyed it. Hope you got a lot out of it. And like I said, if you're thinking about buying a software or some consulting services, feel free to reach out. We'll have a no charge call with you to help you work through what you need and what you're trying to achieve. And we'd be happy to help you. We're always looking to help the home building industry improve, especially our smaller private builders who are just trying to thrive, not survive, trying to thrive. We want to help you smaller production home builders thrive, and we'd love to be a part of that and part of helping the small production builder maintain market share, maintain their local impact, and grow their business and be a part of their community for the long term. That's it for now. See you next week, or talk to you next week. Have an amazing day and take care.
You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets.